Well, hello everyone. One of the questions that I'm getting right now during this whole coronavirus volatility trading action is, Roger, what is your favorite indicator? What is that one indicator that you love right now, that you trust 100% right now, that you're focused on right now? And the answer is, it's actually usually at the top three, top four indicators, but right now it's number one, and it's the volatility index. Ticker symbol is $VIX. And folks, I'm going to tell you something interesting. I had every Friday we have this session where we do a end of week session with a few different gurus and guys who really know what they're doing. And last Friday, there's guys there who are hedge fund managers, professional traders who have made millions and millions of dollars day in and day out. And I'm part of that group. And we do it live on Fridays. And last week we were asked, what's your three favorite indicators? And every one of those traders mentioned the VIX index. So if three or four professional hedge fund world-class traders are talking about the VIX index, that's an indicator that you should look at right now, and I'll explain why. So let's start off looking at the S&P 500. This is the S&P 500. It gives us the daily trading range. Each of these bars gives us a day. This is a daily chart, and this box here is simply, this is what we're looking to see what the daily or the weekly trading range will be, but we don't really need it right now. So let me delete it. So you're seeing now the daily trading range, and the market looks, if we're going to be analyzing this, the market looks like it's sitting and creating an ascending triangle, which is a bullish indicator. But regardless of which way the market's going to go, and right now it looks like it's going to break up higher, regardless of which way it's going to go, what the VIX tells us is how fearful, how panicky, or how complacent the traders who are looking at the S&P 500 are at any given time. So let me explain to you the background of it. If you might have heard the term implied volatility. Implied volatility is simply a word for the expected trading range in the future. So if something is expected, that's implied. Now, the reason it's implied in the options value. So if I was to take an S&P at the money option, all right, and we'll do that right now. We'll just take a look at the options. You will see these are 2 days till expiration. You will see it has a bid, it has an offer. Each of these options is priced above the actual intrinsic value of the asset. And that part of that value is the level of fear or greed that is built into those options. But typically, and here's the part where I'm about to make it really simple for you, typically you would have to take an option, you would have to put it in a model called the Black-Scholes model. And what that model would do is it would take every part of the option's price, like a pie, and it would divide it into parts. And based on the price of the actual S&P 500 and taking into account the volatility, it would tell you how much the option's worth, how much every part of the option's worth. But one of the pieces that it never can tell you is the implied volatility. So anything that's left over after that pie is filled is implied volatility. It's implied. It's not expressed in the price. It's implied in the price of the option. So you could never solve for implied volatility. You would solve for everything else, and then anything that's left over is implied volatility. It's implied in the price. It's like a reflection mirror kind of a thing. But here's the cool part. When you're dealing with the S&P 500, unlike most stocks, you don't have to look for it. The VIX is the implied volatility. The VIX is the implied volatility of the S&P 500 at any given time. So you don't have to go and put anything in the Black-Scholes models. You don't have to compare historic volatility to implied. You don't have to do anything. You don't have to know anything about option volatility. You don't have to know anything about Greeks. You have to simply know that the ticker symbol for VIX is $VIX. And that'll tell you at any given time how much fear is in this index. Now, if you look back 20 years, you can see here that in 2008, we had the VIX go up to about 60. Now, this is not an accurate representation because this is a monthly chart. The VIX actually, this time around, went all the way up to 80. But when we look at a long-term chart, it hasn't been reflected yet. That means it went all the way up here, all the way up to 80. So it went higher than it is right now. But on a monthly basis, it closed at 53 and now it's at 44. So it's actually higher, and you'll see that after the month is over. You'll see that in past tense. But the bottom line is the VIX level went to the highest level. The fear level in the S&P 500 went to the highest level in history. That means we've had nothing but panic. But here's the cool part. Notice here the market went down, fear level spiked, but we've been moving higher and higher, and VIX has been moving lower. If you look over the last, let's see, March 16th, April 6th, if you look over the last 3 weeks, VIX has been going steadily down. That's telling us that the markets are not as fearful as they were 3 weeks ago, even though the number of deaths has been increasing. That's positive, and that's telling us that that initial emotional level, that the VIX reached was based primarily on fear and very little else. And that's also telling us that if the VIX does spike, the odds are it won't make it back to 80. It'll probably make it to about 65, 66 if I had to guess. And that's if the S&P comes back down lower. If the trading range, this is a low trading range as you could see here, and this is the very high trading range. The trading range here is about $2 a share. The trading range here is about $20 per share. Now it's at about $6 a share. So the trading range increased 10 times, and that's what initially caused the VIX to spike, but now it's cooling off. But what I'm liking now is, even during these little periods here, about 3 or 4 days ago when the market sold off about 600-700 points, volatility is still high, the VIX index still went down. It's still moving down, which means it's assimilating the current fear level into its price, and it's being increasingly rational right now. So as long as, and I know this sounds really simple, but as long as the fear level keeps going down, we should see higher prices. Now, looking at it every 5 minutes and looking at it day to day, you're going to see a lot of hiccups like this. You'll see the S&P, the SPY go from 260, and the SPY, we're looking at the SPY, which is the ETF that tracks the S&P 500. So it's a tradable way to track the S&P 500. So as you can see here, with this ascending triangle, which is a bullish pattern, we're going to see lower volatility. Lower volatility makes the VIX go down because lower volatility is usually synonymous with prices going higher. If volatility widens again, like this day right here, or this day right here, or anything like this, then the VIX should come or begin to come back up. But I like what I'm seeing right now, and I like the fact that the market pattern is in an ascending triangle right now, which has a propensity to break higher. If the curve from the coronavirus continues to flatten and the number of deaths continues to be less than expected, we should see more upside from the stock market and less volatility or less fear from the VIX. Now, just to give you a little more insight, usually when the VIX is near 20-ish, give or take, that means markets are fairly complacent. And when VIX spikes above 20, that means something's going on. Now, in this case, we went above 80. So we were it's like a panic zone. People just fires and people just panicking, running out the windows, just havoc happening. We're not there right now, but the environment, the scenario is actually getting worse. So that is very, very positive. So expect a little less volatility and expect the VIX level to continue moving down. And if you see the stock market moving lower or volatility increasing, keep your eye on the VIX level. You can look at it intraday as well. This is Intraday Vix. This is 30-minute charts. Each of these is 30 minutes. So you could see how it does during the day. You could see how it does on a daily basis, on a weekly basis here. You can even see it on a monthly basis. But the point is, don't look at the VIX every 5 minutes because sometimes it could be 1 day behind, 1 day ahead. But every 3 or 4 days, look at the VIX. And if you still continue seeing it going lower, the odds are positive that the stock market is assimilating into its price the current fear level and things are moving as planned, and that's positive. If you see the VIX level spike up again, all bets are off. So again, the VIX $VIX is the implied volatility, or the volatility measurement for the S&P 500. And what I love about it is the fact that you don't need to derive it. It's already derived. So you don't have to go to a Black-Scholes model and see if it's high or see if it's low and derive it and figure it out. It's just there. Just type in the $VIX and you will see how fearful or how greedy or complacent the market is. So right now, if you're watching a report on coronavirus and you hear something really bad come out, and you look at the VIX and it's trading lower, that means the odds are the market has already assimilated whatever you're reading. Contrary, if you're seeing some positive news and you're seeing VIX moving higher, that means there may be something that we're missing. The VIX is looked at day and night by S&P 500 at-the-money options trader. That's what it gauges, the S&P at-the-money. And that is an extremely sensitive asset. So if there's any type of movement, you're going to, beyond randomness, you're going to see it reflect itself in the VIX very, very quickly. $VIX, that's the number one indicator for right now. That's the first indicator I look at when I wake up, the last indicator I look at after the market closes, and that's the one I'm comparing against the S&P 500 to see where there's real fear and greed, and whether the information that we're hearing is already priced into this market. Now, this is really good insider stuff. A lot of retail traders don't focus on this. And speaking of the market fear, greed, the health crisis has made its impact. I mean, even right now, VIX at 44, that's scared. Usually, aside from right now, that would be a very high index. But there's no denying it. Markets are fearful right now. The United States economy is taking a beating. The stock market is moving every which way, and we're all cooped up waiting inside for this ugly pandemic to pass. It's the truth. We really are. But that doesn't mean your portfolio has to suffer. It really isn't. This is one of the best times to trade right now. You see, right now is the most perfect opportunity to establish an emergency plan. That's right, to protect your assets and create a steady stream of positive income. And that's why Josh Martinez, Master Trader Josh Martinez, and I are going live tomorrow, 1 p.m. Eastern Time. 1 p.m. Eastern Time, 10 a.m. Pacific Time, 1 p.m. Eastern Time, to reveal the strategy that we're using during this crisis to literally take money out of this market like clockwork, like this. Here's a hint. It's a little known technical indicator that can turn losing trades into big winners. All the retail traders, or some of the retail traders, are losing money. How about reversing that, riding the opposite side of that? Beginners always lose big. What if you can turn that into your advantage? Think about that. Instead of losing 7 out of 10 trades, what if you can win 7 out of 10 trades? There's a lot of upside to reversing what a beginner or a retail trader does. And if the amazing results we've captured so far are a sign of what's to come, and I think they are, then early adapters are in for some amazing gains. Folks, again, the United States economy is taking a beating. There is a way out of this. Josh Martinez and I are taking our time tomorrow at 1 p.m. Eastern Time to show you how you could profit from this market activity. And it has to do with taking what beginners are doing, or taking what losing traders are doing, and turning it on its head. So far, the gains have been amazing. And if they are any signs for what's to come, folks, you're in for a treat for 2020. I'm not kidding you. You're in for a treat. Big winners, small losers, lots of potential for upside. You do not want to miss this. Click the button after this video or the link below. Join this live webinar tomorrow. It's happening at 1 p.m. Eastern Time. You do not want to miss it. There are opportunities right now because of this VIX and the volatility. It's moving. It's giving us a lot of opportunities. And we're fading traders who don't know what they're doing. And that's the key to this. I mean, folks, this technical indicator can turn losers into big winners. There's a huge advantage here. You do not want to miss this out tomorrow. You want to be there. You want to learn right now. You want to absorb all of this market trading knowledge like a sponge right now, because you're going to be able to make out like a bandit. This volatility is giving us a ticket to make some triple, quadruple gains. You don't want to miss out. Follow the link below. Sign up now. Join us for this live training. It's happening tomorrow at 1 p.m. Eastern Time. Talk soon. Bye, guys.